this video, I'll be answering the question, are dividend stocks better in a stock market crash? Welcome back to my Euan, my name is Channel, and on this channel we talk about personal finance and investing, and on today's video, we're going to be talking about how and why dividend stocks are better in a stock market crash. I will also share insights into my plan of action if we do have a stock market crash fairly soon. And just remember, I'm not a financial advisor, just a random dude on the internet talking into a camera, so please do your own research before investing your capital. So there was a lot of talk about another crash in the stock market on YouTube and in the news, of course, because everyone loves to speculate. But luckily, my good friend Mitch Shoesmith released a video on the September market crash potential, so make sure you go check that video out. I'll link it below. In this video, he explains why potentially we might have a stock market crash in September, and he showed the Swiller PE ratio, which was showing that stocks are currently in an extreme bubble. So if this bubble bursts and it happens fairly soon, which is his prediction, then we need to know what we're going to do with our money and what we should be investing in, and whether dividend stocks are a good investment at all. Personally, I am a dividend investor, and although I do own a little bit of Amazon and a tiny bit of Netflix, those are the only sort of growth stocks that I do actually own. My plan that I've actually stated in previous videos is that I want to build up a dividend portfolio that will basically pay for my lifestyle, pay for my expenses, and live the passive life, dream, income, blah blah blah, you know what I mean. The dividend income will be coming out of the ISA that I currently invest all my money into, and the plan is the dividends that come out of my ISA in 40 years time will be a very large amount, so that tax-free saving will be very, very nice. Is it a bit sad that I'm really excited for that already in 40 years time when I'm 64? I need to get a life. Anyway, enough of that. Are dividend stocks better in a stock market crash? And the answer to that is yes and no. I'll start with the bad news, because if you prefer getting good news before bad news, then
what kind of freak are you?
The bad news is that if you are a dividend investor and you're investing in the stock market and it crashes, some companies will actually cut their dividends, so you'll be completely cut off from your trust fund. I'm joking. Completely cut off from your dividend income. This does happen with some companies when there is a crash, depending on what industry crashes, and etc, etc. A lot of different factors. Personally, I have been impacted by the 2020 crash and the dividend cut. Disney, which cut their dividend completely or postponed it, and Wells Fargo, which basically halved their dividend, which is not ideal. Although this hasn't had a massive impact on my portfolio, it could potentially have a big impact down the line. The second bit of bad news is that if we have a stock market crash, as a dividend investor, you may get FOMO, aka fear of missing out. So Tesla, for example, in March were about $300, $350 to buy a share. Now they're at $2,000, which is absolutely insane. Obviously, this has to do with their stock split and many other reasons. And although I'm not a fan of owning the most volatile stock in the market, I do wish I'd put maybe a couple of £100 into Tesla in March, maybe as just sort of a side bet, because I would have made quite a lot of money. But no regrets, not even one. With that being said, I still believe that dividend stocks are a good investment, especially during a stock market crash, and here's why. Number one is most companies still continue to pay their dividend, especially dividend aristocrats. If they decide to cut their dividend, then they will lose their reputation as dividend aristocrats, and that will definitely tarnish their stock price, and it won't be good. So although you may lose perhaps 20-30% of your income from dividends, you may still be receiving dividends from most of your companies, depending on how diverse you are, of course. So you'll still be getting that passive income. And guess what? Now you have dividend income that you can reinvest back into the stock market. So you can find those fair value and undervalued stocks that you may have wanted to invest in the past, but you thought they were overvalued. And by doing this, you're getting more bang for your buck, and you are getting deals, left, right, and centre, mate. And essentially, by reinvesting your dividends, you are speeding up the process of compound interest and the compounding effect. This brings us perfectly onto the second point of why dividend stocks are better in a stock market crash. And that is because the reason is if you are buying dividend stocks when the market is low and you're getting undervalued or perhaps fair value stocks, then you will not only benefit from the dividend income that you receive from buying that dividend stock, you are also likely to benefit from capital appreciation over a long period of time. Obviously, you can get capital appreciation on dividend stocks whenever you buy them, but you're going to see a bigger return when you buy them when the market is down and they are undervalued. You're also likely to benefit from the lower prices of the shares. So instead of perhaps getting 1 share in Apple, you might be able to get 2, purely because you have that extra income. So you're basically getting your 2-for-1 deal because the stock price is so low. Obviously, if it's still undervalued. And as that stock recovers, you're more likely to receive a higher dividend income because you own more shares and also the price has increased. And the third reason why I think dividend stocks are better in a stock market crash is that dividend stocks tend to be companies that have been around for a long time, they've got consistent profits, they've got consistent revenue, and they would have survived market crashes and recessions, etc., etc. So they're a lot more stable and a lot more trustworthy, in my opinion. The stock price might not be as high and it might not be as fun to invest in these type of companies. However, they are long-standing and reliable companies. And for this reason, it gives me a lot of hope when investing in these companies that they will continue to do well and continue to be very consistent over a long period of time. Obviously, anything can happen in the stock market, and just because it happened in the past doesn't mean it will happen in the future, but companies with a long track record are more likely to continue in that fashion. So in my opinion, and it is my opinion, I think that dividend stocks are actually safer bets in general, and when there is a crash, this is when dividend stocks completely excel because you can reinvest these dividends into cheap and undervalued stocks. They do pay a dividend, then you're basically doubling a dividend, etc., etc., and compounding your money. Whereas with growth stocks, you may see a big red number and be like, how am I ever going to recover from this? Although they often do recover, I personally prefer dividend stocks purely from a peace of mind perspective and for my ticker. Because when I see red, I know that I'm still receiving that sweet, sweet passive income, which if it was a recession, then maybe you might need that income, or you can reinvest it into the undervalued and cheaper stocks and make a lot of money over a long period of time from reinvesting those dividends back into the companies they've already invested in, or new companies or whatever. So that's a win-win in my book. Personally, I'm going to have the majority of my portfolio in dividend stocks / ETFs because most of my money's in ETFs, but they still pay a dividend payout, or a payout as they'd like to call it, purely because I can't deal with the heartbreak of losing all my money in Tesla. Sorry, Elon. Obviously, I do see the value in investing in growth stocks, hence why I'm invested in Google and Netflix, but that is it for me at this current moment. Maybe down the line I will see more opportunities, I will learn more and decide which investments are good for me. But dividends and sweet, sweet passive income is my weapon of choice, as I've said, and I'm going to continue to stick with that. It would be great to know your thoughts and your goals down in the comments below. What are you going to do? You're going to be a dividend investor, growth investor, or just trade on the stock market and don't listen to anything I say? Each to their own. That's it from me. I hope you enjoyed this video. If you've got some value out of it, please hit that like button, subscribe to my Euan, and hit that notification bell for a reminder of every time I upload. And don't forget, I'm trying to hit 10,000 subscribers by the end of this year. So please, please, please tell your mum, tell your dog, tell your aunt, tell your pet monkey, and then we can be friends, can't we? We can all be friends. We can all be a happy family, friends and family on YouTube. I don't know where I'm going with that. Anyway, I'm not a millionaire, but I'm trying to help you become one. So, peace. Better in a stock market crash. I tried to do it really quickly to see if anyone would notice. For a dividend investment, and although I'm not a fan of I'm done.